You know that feeling when you check your trading account and your stomach drops? Yeah, I've been there too. Staring at red numbers, wondering if maybe you're just not cut out for this, questioning every decision you've made. But here's something nobody tells you when you're starting out. Becoming profitable isn't about finding some secret strategy or magical indicator. It's about fundamental shifts in how you think, how you react, and how you approach the markets. And the crazy part, most traders never recognize these shifts happening until they look back months later and realize everything changed. Let me tell you about something that happened to me about 3 years into my trading journey. I was sitting at my desk, watching a trade move against me. My heart rate was steady, my breathing was normal, and I just calmly adjusted my stop loss according to my plan. Then it hit me. 6 months earlier, that same scenario would have had me sweating, second-guessing everything, maybe even revenge trading to make back losses that hadn't even happened yet. That moment of clarity showed me I'd crossed some invisible threshold. I wasn't the same trader anymore. The thing about profitable trading is that the journey looks different for everyone, but there are unmistakable signs that you're making real progress. These aren't the surface-level changes like having a few winning weeks or finally understanding how to read a candlestick chart. We're talking about deep, psychological shifts that separate people who make consistent money from those who keep spinning their wheels. First, let's talk about what happens when losses stop controlling your emotions. This is massive, and it's probably the biggest indicator that you're evolving as a trader. In the beginning, every loss feels personal. It feels like the market is out to get you specifically, like you made some terrible mistake, like you're falling behind everyone else who's winning while you're losing. Your mind starts playing these awful games where you imagine all the things you could have bought with that money you just lost. Maybe it was rent money. Maybe it was supposed to be for something important. The guilt creeps in, then the fear, then the desperate need to make it back immediately. But something changes when you start becoming profitable. Losses transform from emotional events into data points. You start seeing them as the cost of doing business, exactly like a restaurant owner sees the cost of ingredients or a store owner sees rent. Think about it this way. If you own a coffee shop and you spend money on coffee beans, you don't go home crying about the money you spent on beans. You understand that's part of running the business. Profitable traders reach this same understanding about losses. I remember talking to a trader named Marcus who'd been consistently profitable for about 2 years. He told me about a day when he took 3 losses in a row, which would have absolutely destroyed him in his first year of trading. Instead, he closed his laptop, went for a walk, came back, reviewed what happened, and just moved on with his day. No drama, no revenge trading, no emotional spiral. He checked his journal, confirmed he'd followed his rules, and accepted that sometimes the market just doesn't cooperate with your analysis. That's the shift. You stop taking losses personally because you understand they're inevitable and they're already accounted for in your system. The math becomes clearer too. When you're profitable, you understand that if your system wins 60% of the time, and your average winner is bigger than your average loser, you're going to make money over time, even though 40% of your trades lose. Those losses aren't failures, they're just the 40%. You've already accepted them before you even enter the trade. This mental shift is absolutely crucial because it allows you to keep executing your strategy without emotional interference. Here's another thing that changes. You stop overtrading. This one sneaks up on you because in the beginning, you don't even realize you're overtrading. You think you're being active, engaged, finding opportunities. You're in the charts constantly, looking for setups, convinced that more trades equal more opportunities for profit. You're scanning through different time frames, jumping between currency pairs or stocks, taking trades that kind of look like your setup but not really. You're forcing things that aren't there. But profitable traders develop something that's almost like a sixth sense for quality setups. You start getting picky, really picky, in a good way. You develop this ability to look at a chart and immediately know whether it's worth your time or not. You're not trying to make the market do what you want. You're waiting for the market to show you what it's already doing. There's a massive difference between those two approaches. I used to take probably 20 to 30 trades a week when I started. I thought I was hustling, putting in the work, but most of those trades were mediocre at best. My win rate was all over the place, my risk-reward was inconsistent, and I was basically gambling with extra steps. Now I might take 5 to 8 quality trades in a good week, sometimes fewer. And here's the wild part. I make more money with fewer trades because each one meets strict criteria. Each one is a genuine high-probability setup based on my system. You know you're becoming profitable when you can sit in front of your charts for an entire session and take 0 trades without feeling like you wasted your time. You understand that protecting your capital by not taking bad trades is just as important as making money on good trades. Sometimes the best trade is no trade. That's not something beginners understand because they feel like they need to be doing something, always active, always in the market. But the market doesn't care about your need to feel productive. It does what it does on its own schedule. This connects to another sign. You develop genuine patience, not the white-knuckle, forced patience where you're fighting every urge to jump into a trade. I'm talking about calm, confident patience that comes from trusting your process. You're waiting for your edge to appear because you know it will eventually. You're not anxious about missing out because you understand that opportunities come around regularly when you know what to look for. Think about a lion hunting. A lion doesn't chase every animal it sees. It waits, watches, conserves energy, and then strikes when conditions are optimal. Profitable traders operate the same way. You're not exhausting yourself chasing every market move. You're selective, strategic, and when your moment comes, you act decisively. This patience extends beyond just entry points too. You're patient with your exits, letting winners run instead of snatching small profits out of fear. You're patient with your learning process, understanding that mastery takes time. You're patient with drawdowns, knowing they're temporary if you stick to your process. The relationship you have with your trading plan changes completely as well. In the beginning, a trading plan feels like this rigid set of rules that limits you. You're constantly tempted to break it, to make exceptions, to trust your gut over your system. You see a setup that doesn't quite fit your criteria but feels right, so you take it anyway. You hit your daily loss limit, but convince yourself the next trade will be different. Your plan says to risk 1% per trade, but you bump it to 3% because you're really confident this time. When you're becoming profitable, your plan transforms into something different. It becomes your anchor, your protection, your edge in the market. You follow it not because you have to, but because you've seen what happens when you don't. You've tested it, refined it, proven to yourself that it works over a large sample size. You trust it more than you trust your emotions because you know your emotions lie to you, especially under pressure. This doesn't mean your plan never changes. Actually, profitable traders continuously refine their strategies based on data and experience. But the changes are systematic and tested, not impulsive reactions to a few bad trades. You make adjustments during your review time, not in the heat of the moment. You backtest modifications before implementing them with real money. Your plan becomes a living document that evolves with your growth, but it's always based on logic and evidence, not fear or greed. There's also this interesting thing that happens with how you consume trading information. When you're starting out, you're all over the place. You're watching every YouTube video, reading every article, jumping from strategy to strategy. You try moving averages one week, then pivot to price action the next week. Then someone mentions Elliott wave theory and you dive into that. You're in trading Discord servers and forums, getting overwhelmed by conflicting advice. One person says indicators are useless, another swears by them. Someone tells you to trade breakouts, someone else says breakouts are traps. You're drowning in information but starving for actual wisdom. Profitable traders cut through the noise. You stop looking for new strategies because you've found what works for you and you're committed to mastering it. You become selective about who you listen to, focusing on traders who actually have verifiable track records and whose approach aligns with your own. You understand that trading is personal, that what works brilliantly for someone else might be completely wrong for your personality, schedule, and risk tolerance. You also stop looking for shortcuts. You're not hunting for the holy grail indicator or the perfect strategy that wins every time. You know it doesn't exist. You've accepted that trading is about probabilities, not certainties, and that consistent profitability comes from executing a sound strategy over and over again. not from finding some secret that nobody else knows about. Your pre-trade and post-trade routines become non-negotiable. This might sound boring, but it's actually one of the clearest signs you're maturing as a trader. In the beginning, routines feel unnecessary. You just want to trade. You want action, results, profits. But profitable traders understand that the work you do before and after the trade is often more important than the trade itself. Before you trade, you're checking multiple timeframes, confirming your bias with multiple pieces of evidence, calculating your position size precisely, knowing exactly where your stop-loss and take-profit levels are before you enter. You're checking the economic calendar for major news events. You're making sure you're in the right mental state to trade. If you're angry, stressed, or distracted, you recognize that and step away. You don't force it. After the trade, win or lose, you're journaling, not just noting what happened, but analyzing why it happened. What did you see that made you enter? Did the trade play out as expected? If it won, what did you do right? If it lost, was it because you made a mistake or because the market just didn't cooperate with a valid setup? You're looking for patterns in your behavior, identifying what you do well and what needs improvement. This journaling isn't punishment or busy work. It's the feedback loop that accelerates your growth. I can't stress enough how important this is. Your trading journal is basically a conversation with yourself about your performance. It's where you spot the leaks in your game. Maybe you notice you always overtrade on Fridays. Maybe you see that you cut winners short when trading a particular asset. Maybe you realize your win rate drops significantly when you take trades in the first hour of the market open. These insights are gold, but you only get them through consistent review of your trades. Another huge shift happens in how you think about risk management. Beginning traders see risk management as this annoying thing that limits their profit potential. They want to risk 5 or 10% per trade because they want to make money faster. They don't want to use stop losses because they've seen trades come back into profit after initially moving against them. They focus almost entirely on potential rewards while downplaying the risks. Profitable traders flip this completely. Risk management becomes the foundation of everything you do. You're obsessed with protecting your capital because you understand that you can't make money if you blow up your account. You never risk more than you're comfortable losing on any single trade, usually somewhere between 0.5% to 2%, depending on your system and account size. You place your stop loss based on technical levels and market structure, not on how much you're willing to lose. If the logical stop loss based on the chart is too wide for your risk parameters, you don't take the trade. Simple as that. You also think in terms of risk-reward ratios. You're not interested in trades that only offer a 1-to-1 reward relative to your risk. You're looking for situations where you can risk $1 to make 2, 3, or more. This doesn't mean you only take trades with massive profit targets. It means you're strategic about where you enter and where you exit to maximize the mathematical edge in your favor. Understanding position sizing becomes second nature too. You automatically calculate how many shares or contracts or lots to trade based on your predetermined risk amount and where your stop loss is. This happens before you enter the trade, not after. You're not guessing or using the same position size for every trade regardless of the setup. You're precise and systematic. Something else that indicates you're becoming profitable. You stop blaming external factors for your losses. In the beginning, it's always something else's fault. The market makers manipulated the price. The broker widened the spread at the worst possible moment. Some unexpected news came out. Another trader with a huge position moved the market against you. There's always a reason outside of your control. Profitable traders take full responsibility for their results. Even when external factors play a role, you recognize that you chose to be in that trade. You chose your entry, your position size, your stop-loss level. You could have checked the economic calendar. You could have avoided trading during high-impact news. You could have used better risk management. Taking ownership isn't about beating yourself up. It's about acknowledging that you're in control of your decisions, which means you have the power to improve your results. This ownership extends to winning trades too. You don't attribute your winners to pure skill while blaming your losers on bad luck. You evaluate both objectively, understanding that sometimes you win despite making mistakes, and sometimes you lose despite doing everything right. The market is probabilistic, not deterministic. Your job is to consistently execute high-probability setups and let the statistics play out over time. Your relationship with money itself changes as you become profitable. This is subtle but powerful. When you're struggling, trading feels like a way to make quick money, to change your financial situation overnight, to escape whatever circumstances you're trying to escape from. You're trading with money you can't afford to lose, which makes every decision emotionally charged. You need to win because you need the money, and that need creates desperation, and desperation creates bad decisions. Profitable traders have detached from the money in a healthy way. You're trading with capital you can afford to risk, which removes the desperate energy from your decisions. You're not thinking about what you could buy with your profits or what bills you won't be able to pay if you lose. You're thinking in terms of percentages and probabilities. A 2% gain on your account is a 2% gain whether your account is $10,000 or $100,000. The focus is on the percentage returns and the process, not the dollar amounts. This detachment allows you to make rational decisions. You can take a stop loss without it ruining your day, because that stop loss represents a predetermined, acceptable risk. You can let a winner run without getting antsy and closing it early because you're not thinking about what you could do with that money right now. You're thinking about letting your edge play out fully. Your confidence changes too, but maybe not in the way you'd expect. You'd think becoming profitable would make you super confident, maybe even cocky about your abilities. But what actually happens is you develop a quiet, grounded confidence that's completely different from the false bravado beginners sometimes display. You're confident in your process, not in your ability to predict the market. You know you have an edge, but you also know that edge only plays out over many trades, not on any single one. You become comfortable saying, you don't know what the market will do next. You can look at a chart and say, this could go either way, so I'm not trading it, without feeling like you're admitting weakness. You're not trying to prove anything to anyone. You're not in trading chat rooms making bold predictions to impress people. You're focused on execution, on following your process, on managing your risk. The results take care of themselves when you take care of the process. This confidence also means you're not shaken by drawdowns the way you used to be. You understand that drawdowns are inevitable. Every trading system goes through periods of underperformance. The market changes rhythms, and sometimes your edge is less pronounced for a while. Instead of panicking and abandoning your system, you trust your backtesting and your historical data. You've seen your system recover from drawdowns before, so you have faith it will do so again as long as you keep executing properly. Finally, and this might be the most important sign, you start treating trading like a real business. This goes beyond just having a business plan or keeping good records, though those are important. It's a complete mindset shift about what you're doing and why you're doing it. You're not gambling, you're not playing around, you're not hoping to get lucky. You're running a business where your product is capital allocation and risk management. You invest in your business. You're willing to pay for quality education, for good charting software, for a reliable broker with good execution. You're investing time in backtesting, in studying, in improving your skills. You're maintaining professional standards even though you might be trading from home in your pajamas. You have set hours when you trade and set hours when you don't. You keep detailed records for tax purposes. You're thinking about things like tax efficiency and account protection. You also set realistic expectations. You're not expecting to double your account every month. You understand that consistent, modest returns compound into significant wealth over time. If you can average 2 to 5% per month consistently, you're doing extremely well. Those returns might not sound exciting compared to the stories you see online about people who supposedly made 1,000% in a month, but they're sustainable and they're real. You've stopped chasing fantasies and started building something solid. The truth is, becoming a profitable trader is less about learning some complex strategy and more about becoming a different kind of person. It's about developing discipline where you had impulsiveness. It's about cultivating patience where you had anxiety. It's about building systematic thinking where you had emotional reactions. The technical skills matter, sure, but they're almost secondary to these psychological and behavioral shifts. If you're reading this and recognizing some of these signs in yourself, that's genuinely great. It means you're on the right path. If you're not there yet, don't get discouraged. Every profitable trader was once exactly where you are, struggling with the same challenges, making the same mistakes, feeling the same frustrations. The difference is they kept going, they kept learning, they kept refining their approach until these shifts started happening naturally. You can do the same thing. It just takes time, consistency, and a commitment to continuous improvement. Trading will teach you these lessons whether you want to learn them or not. The only question is how much tuition you'll pay the market before you finally get it.